December 2021. Ratings agencies declare Evergrande in default after missing bond payments. Approximately $300 billion in liabilities. Payments missed. Restructuring limbo. Within hours, panic spreads across China's property markets. Bondholders scramble. Suppliers demand payment. Home buyers flood the streets. 1.6 million unfinished apartments, hundreds of abandoned construction sites, millions of families watching their life savings disappear. This isn't one company failing. This is an estimated 25 to 30% of China's GDP cracking apart, including related industries. But here's what makes this different. The warning signs weren't hidden. They were structural, built into the system itself. Regulators knew, investors knew. Zhou Jiayin, Evergrande's founder, definitely knew. For years, everyone kept pretending it would last forever. This is the story of how China's largest property developer built an empire on borrowed money and empty promises, and how the entire system finally broke. Evergrande didn't begin as a fraud. In 1996, Zhou Jiayin founded the company in Guangzhou. His pitch was simple: build affordable housing for China's urbanizing population. Zhou wasn't born into wealth. He grew up in rural Henan province. His mother died when he was young. He worked in a steel factory before getting into property development. His background became part of his legend, the self-made billionaire, the man who understood what ordinary Chinese families wanted. And in 1996, timing was everything. Hundreds of millions of people were moving from villages into cities. They needed places to live. Zhou spotted the opportunity early. He borrowed money, bought land, built apartments, sold them before construction finished, the pre-sale model. In China's booming market, it worked perfectly. Buyers paid deposits up front. Zhou used that cash to buy more land and start more projects. The cycle repeated, faster and faster. By the early 2000s, Evergrande was expanding across southern China. Thousands of units. Explosive growth. But Zhou had something else working in his favor: political connections. He cultivated relationships with local officials, the ones who controlled land sales, the ones who approved permits, the ones who could make problems disappear. Zhou knew how the system worked. He hosted banquets, made donations, built relationships that gave Evergrande access to land at favorable prices, faster approvals, preferential treatment. By 2009, Evergrande was one of China's top developers. By 2017, it was the largest. Zhou became one of China's richest men. Personal wealth peaked above $40 billion. He appeared on Forbes lists, gave speeches about entrepreneurship, built a football club and renamed it Guangzhou Evergrande. The company wasn't just building apartments anymore. Electric vehicles, theme parks, bottled water, baby formula, a media company, an insurance arm. Evergrande presented itself as unstoppable, a diversified conglomerate, a symbol of China's rise. Zhou was celebrated as a visionary. Everything looked perfect, except the foundation was cracking. Evergrande's pitch was simple: unstoppable growth. By 2020, the company had 1,300 projects across 280 cities. It employed 200,000 people. It had sold apartments to millions of families. Revenue surging, projects expanding, sales breaking records. The numbers looked incredible. But there was a problem. Revenue was growing. Debt was growing faster. By 2020, Evergrande owed over $300 billion to banks, to bondholders, to suppliers, to homebuyers who'd paid for apartments that didn't exist yet. The company wasn't profitable in any traditional sense. It was surviving by borrowing more money to pay back old debts. This should have been a red flag. But in China's property market, debt wasn't seen as dangerous. It was normal, because the pre-sale model meant developers could sell apartments before building them. Homebuyers paid deposits up front, sometimes years before construction started. This gave developers immediate cash to buy more land and start more projects. The system worked as long as prices kept rising, as long as people kept buying, as long as money kept flowing. Evergrande perfected this better than anyone. But it created a dependency. The company needed constant pre-sales to fund operations. If sales slowed, the entire structure would collapse. And Evergrande wasn't just building anymore. It had diversified into completely unrelated businesses. Electric vehicles that weren't in production, theme parks that lost money, a football club that burned cash. In 2019, Xu announced Evergrande would become the world's largest electric vehicle manufacturer within 3 to 5 years. The company unveiled concepts for 9 different models, promised factories across China. It was pure fantasy. Evergrande had no experience building cars, no manufacturing expertise, no real technology, but the announcement generated headlines, made Evergrande look innovative, forward-thinking. These ventures weren't profitable. They were distractions, ways to project strength while masking the underlying fragility. Internally, whistleblowers started warning about problems. Projects were being delayed. Cash flow was tightening. Some developments had stopped entirely, leaving half-finished buildings abandoned across second- and third-tier cities. One former executive later described the internal culture as "build first, worry about money later." Project managers were pressured to hit targets regardless of whether funding was secure. But externally, Evergrande kept projecting confidence. Xu gave interviews talking about Evergrande's bright future. The stock price stayed high. Investors kept believing. Too big to fail. That's what everyone thought. Xu kept expanding, kept borrowing, kept building. Because growth wasn't the engine anymore. Borrowing was. Evergrande's debt wasn't just bank loans. It was everywhere. The company borrowed from Chinese state banks, issued bonds to international investors, took money from trust products, a form of shadow banking popular among wealthy Chinese. Shadow banking operates outside traditional regulatory oversight. Wealthy individuals and institutions lend money through trust companies, often at higher interest rates than banks offer. Evergrande used these extensively. By 2020, the company owed billions through these shadow channels, money that didn't show up clearly in official reports, money that regulators struggled to track. One wealth management product called Evergrande Wealth promised returns of 12% annually. Thousands of Evergrande employees and their families invested. So did external customers who trusted the Evergrande name. The product wasn't regulated like a bank deposit. It was essentially an IOU from Evergrande, promising to pay back investors with interest. When Evergrande started collapsing, these investors couldn't get their money back. But the debt went deeper. Evergrande owed money to suppliers, construction companies that built the apartments, materials suppliers who provided steel and cement, contractors who installed plumbing and electrical systems. When cash flow tightened, Evergrande stopped paying them in cash. It issued IOUs, commercial paper promising future payment. Many suppliers had no choice but to accept. Evergrande was their biggest client. Refusing meant losing the contract entirely. So they took the IOUs and hoped Evergrande would eventually pay. It didn't. As liquidity problems worsened, projects slowed, then stopped. Construction sites sat abandoned. Half-finished apartment blocks. No workers, no materials, no money to complete them. In Kunming, a city in southwestern China, an Evergrande development called Emerald Bay sat frozen. 2 towers half-built, cranes sitting idle, weeds growing through the construction sites. Home buyers who'd already paid deposits were left waiting. Some had put down their entire life savings, watching their future homes sit unfinished. But Evergrande kept reporting strong financials to investors. How? Inflated asset valuations. The company valued its land holdings and projects at optimistic prices. Prices that assumed the property market would keep booming forever. It reported revenue from pre-sales as if the apartments were already built and delivered, even though many would never be completed. The cash flow was phantom. The profits were fiction. Evergrande was operating like a rolling liquidity trap, borrowing more to pay back old debts, selling more apartments to cover existing obligations. It only worked as long as confidence held. The moment people stopped believing, the entire structure would collapse. And in 2020, Beijing changed the rules. August 2020, China's government introduced new regulations for property developers. 3 financial thresholds they had to meet. The 3 red lines. First, liability to asset ratio below 70%. Second, net debt to equity ratio below 100%. Third, cash to short-term debt ratio above 1. Developers violating all 3 would be restricted from taking on new debt. Violating 2 meant limited borrowing. Meeting all 3 meant flexibility to expand. The regulations were designed to reduce risk in China's overheated property sector, to force developers to deleverage, to prevent exactly the kind of collapse that was coming. Evergrande violated all 3 red lines. Its liabilities were massive. Its debt was out of control. Its cash reserves were dangerously low. The new rules cut off Evergrande's lifeline. The company could no longer borrow freely to cover obligations. It had to start paying down debt immediately. But Evergrande didn't have the cash. Xu tried to sell assets, the electric vehicle division, the theme parks, parts of its property management arm. Nothing moved fast enough. Buyers were cautious. The valuations Evergrande wanted were unrealistic. In September 2021, Evergrande tried to sell a 51% stake in its property management unit to rival developer Hobson for $2.6 billion. The deal would have provided desperately needed cash. But within weeks, Hobson walked away. The terms couldn't be agreed. The window closed. Meanwhile, pre-sales started collapsing. Homebuyers lost confidence. Why pay a deposit for an apartment that might never be built? News of Evergrande's financial troubles spread on Chinese social media. Videos of unfinished construction sites went viral. Stories of angry homebuyers demanding refunds circulated. People stopped buying. Without pre-sales, Evergrande had no cash flow. Construction ground to a halt across the country. Suppliers stopped delivering materials. Workers walked off sites. Some hadn't been paid in months. By mid-2021, Evergrande had 1.6 million unfinished apartments scattered across China. Families who'd already paid were left in limbo. Local governments started pressuring Evergrande to finish projects, but the company didn't have the money. Xu tried negotiating with creditors, asked for extensions, proposed restructuring plans that would stretch payments over years. None of it worked. The debt was too large, the problems too deep, the trust too broken. Bondholders wanted their money. Suppliers wanted payment. Homebuyers wanted their apartments. With its lifeline cut, Evergrande collapsed under its own weight. December 2021, Evergrande officially defaults on its offshore dollar bonds. $300 billion in liabilities, the largest default by a private company in Chinese history. Bondholders wiped out. International investors who'd bought Evergrande's dollar-denominated bonds lose billions. BlackRock held Evergrande bonds. So did HSBC, UBS, Ashmore Group. Funds that had believed Evergrande was too big to fail. They were wrong. But the real damage is in China. Across hundreds of cities, homeowners who paid deposits for unfinished apartments take to the streets. Protests erupt outside Evergrande offices, outside local government buildings. In Shenzhen, dozens of homebuyers gather outside Evergrande's headquarters, holding banners. "Return our hard-earned money," they chant. "Give us our homes." Police arrive. The protesters are dispersed. But similar scenes play out in cities across China. People hold signs, chant slogans, demand their money back, demand their apartments be finished. Many had taken out mortgages to buy these homes. Now they're paying loans for apartments that don't exist. In July 2022, frustrated homebuyers in multiple cities begin a mortgage strike. They announce they'll stop making payments until construction resumes on their unfinished homes. The movement spreads to over 300 projects across 50 cities. Suppliers go bankrupt. Construction companies that relied on Evergrande for revenue collapse. Migrant workers who'd spent months on Evergrande sites lose their jobs and their wages. Entire supply chains freeze. Local governments are forced to intervene. Some take over unfinished projects directly. Others pressure state-owned developers to buy and complete Evergrande's abandoned sites. But it's too late to contain the damage. In September 2023, Xu Jiahin is placed under police surveillance. He's being investigated for suspected illegal crimes. The specifics remain unclear, but reports suggest suspected fraud and illegal transfer of assets. The man who was once worth $40 billion is now under investigation. The contagion spreads. Other major Chinese developers start showing similar problems. Country Garden, once seen as more stable than Evergrande, reports massive losses. Sunac defaults on bonds. Shimao misses payments. China's entire property sector, which had seemed invincible for decades, is unraveling. Global markets react. Investors reassess risk in Chinese real estate. Bond prices for Chinese developers collapse. Stock prices plummet. The fear isn't just about Evergrande. It's about what Evergrande represents. If China's largest developer could collapse this spectacularly, what else is built on the same shaky foundation? Banks that lent to Evergrande face mounting losses. Shadow banking products tied to property see mass withdrawals and investors panic. Confidence in China's financial system takes a serious hit. The Chinese government tries to manage the fallout. It injects liquidity into the banking system, orders state-owned enterprises to buy distressed assets, pressures developers to prioritize finishing homes for buyers over paying back bondholders. But the damage is done. Evergrande exposed the cracks in China's entire growth model, and the world is watching. Evergrande's collapse triggered a reckoning. For decades, real estate had been the engine of China's growth. Local governments relied on land sales for revenue. Developers borrowed heavily to expand. Families poured savings into property. It worked as long as prices kept rising. Evergrande proved it wouldn't last. China's economy was over-reliant on real estate. Household wealth was concentrated in apartments. When the property sector stumbled, everything else felt it. Local governments that depended on land sales saw revenues collapse. Banks that lent to developers faced mounting bad loans. Millions of families were left with unfinished apartments and mortgages on homes that didn't exist. The incentives that drove this disaster were built into the system. Developers were rewarded for expansion, not sustainability. Local officials were judged by growth figures, not financial stability. Regulations existed but weren't enforced until too late. Evergrande wasn't an anomaly. It was the inevitable result of a system designed for endless growth with minimal oversight. The global implications are still unfolding. China's property slowdown means reduced demand for construction materials. International investors who bought Chinese property bonds face massive losses. And the broader question remains: if China's growth model was built on unsustainable debt and real estate speculation, what comes next? Evergrande didn't just collapse. It revealed the fragility of an entire era of economic growth. A system built on debt, on rising property prices, on the belief that growth would never stop. Xu Jiahin built an empire by borrowing against tomorrow, by selling apartments that didn't exist, by expanding faster than the company could sustain. And for years, it worked, because everyone wanted to believe. Local governments needed the tax revenue. Banks wanted the interest payments. Homebuyers wanted the promise of wealth. Officials wanted the GDP growth that came with construction. No one asked what would happen when the music stopped. Now we know. Xu is under investigation. Evergrande is being dismantled piece by piece. Millions of homebuyers are left waiting for apartments that may never be finished. The broader Chinese property sector remains in crisis. Sales are down, prices are falling, developers are defaulting. But the system that created Evergrande, still running.